for the week of September the 4th, 2012. Let's take a look at markets here. We see that still after about almost 4 weeks now, the market has found it very difficult to break out as far as the Nasdaq is concerned. About 3,100 seems to be an area of resistance. Again, you see that the RSI also has pretty much been stalling where I thought it would stall. So there's some technical, reason why this market seems to be trying to decide whether it's gonna break out or whether this stall is actually going to be confirmed with a further move to the downside. Right now, the way it seems like, we are in no man's land. This is the RSI, exactly where you'd find the resistance, and it's trading at that level right there. So that tells me that we're still playing a wait and see game here. Also, if you take a look at the Dow weekly, you'll see that the Dow had managed to break out about 4 weeks ago above 13,232 on a weekly chart. We've since moved back below that level, so that's a failed breakout for you. Also, we were expecting that this level here on the RSI would be resistance. As of right now, we see that that has been already confirmed on a weekly chart. So, again, here the Dow is showing that this most recent breakout attempt has failed and was gonna fail, and that to me is a reason why I still think that despite the almost sideways action, the market's with a slight downdraft, but the market's been trading in a range, so tight range. I think eventually we move lower short term. That's what I see. If the market breaks out and holds above breakout levels, then maybe we can say, oh no, market's actually poised to go higher. But for now, that's what seems to me that failed breakouts is what we are looking at. On the Dow monthly chart, you'll see that the the price has failed to hold above the former monthly breakout level of 13,213. So we still remain below that, and that's a failed breakout for you. Also on the RSI, you'll notice that now we have these lows coming from late 08, summer, and then summer of 2011. This monthly chart, should we break down below this level, that's going to lead to an absolutely ugly pullback. So the market does need to defend this RSI level, because if we break down below this level here, it's really not going to be a fun time to be in the market. So we need to hold that. Otherwise, a break of this RSI support line and things really get really negative, with stocks, almost most of the stocks losing a lot of ground. On the other hand, the possibility of the market breaking out would also lead to a fierce rally. So we have this conclusion of this wedge type formation that has been taking place since late 2007. So we're either going to get a breakout or a breakdown from this wedge type formation here, and whatever direction the market picks, if it's a breakout, it's going to lead to a strong rally. If it's a breakdown, it's going to lead to an absolutely strong sell-off, aka correction, aka bear market territory. So we'll see what happens. The Dow Transports, as you can see, they've been struggling to hold above this price channel top lines. You see now that the 10-week moving average and the 33-week moving average are all pointing lower. The 10-week and the 13-week moving average, are all pointing lower. So, that is another sector in the market we need to watch for potential break. One could also argue that it's still trading in this wedge type formation, so it hasn't decided which way it wants to play on a weekly chart, and that could also be true. So right now we're just sitting below the moving averages, so net slightly negative looking chart here. If we take a look at the S&P 500, the breakout point was 1408, and you can see we are now trading below that at 1404. So we are about a couple points below that. This was now becoming a failed breakout attempt, trying to hold above 1408. Also, you'll see that like the Dow and the S&P 500, this is where we were expecting the RSI to stall. Sorry about that, but really what we are looking at here is that the weekly chart showing an RSI resistance. The market has failed to move the RSI above that level, so one can only conclude that the RSI has stalled, and that being the case, this could turn out to be a really troublesome looking chart here going over especially this month of September and going forward. As you can see, this confirms that this is an RSI weekly chart topping area with former, this here was a turn point which connects to the highs, and again we see that on that same line, this is the RSI top lines on the weekly, confirming that this could also be a troublesome area in the market. If the market can move above that, definitely we are going to be seeing the market push lower, most definitely. Let's take a look at the Nasdaq one. Let's take a look at the S&P 500, excuse me. You see that the buy point again on a monthly chart was 1408, and so we are slightly below that. So the market does need to hold above that 1408 level if this rally is to continue. Anything below that is a failed breakout on the monthly chart, and I think we see the markets push lower. So we need to hold above 1408, otherwise we are going to be looking at a lower market for the next couple of months, if not longer. The Nasdaq 100 also needs to hold its monthly breakout level here of about 2755. It needs to hold that level. It's slightly trading above that level, so it's good, looking good. It does need to defend that area, otherwise your breakout or a breakdown and a break of this RSI support line here that connects it to the lows of early 2009. If this RSI breaks here, that's going to lead to a market with a lot of downside, so we have to be very aware of that. Let me repeat that. A break of this line here on the RSI is going to lead to a very, very, very ugly market. So let's take a note of that. If you take a look at the semiconductor index, you see what I wanted to point out here is the RSI. Take the highs over the last year or so, since actually going back to beginning of 2011. On a weekly chart, draw a straight line on the RSI. You'll see that we hit that level right there, and the market is now finding it difficult to move above that. That could be a sell signal too in the market. If you take a look at the SOX semiconductor from a monthly view, you see that the market is, really trading dangerously, because if it breaks this RSI support level there, if that breaks, that's going to lead to a market where being long is just going to be absolutely devastating. So just take a note of that, because if this market breaks that support line, it's not going to be good. That also corresponds with a potential break of this price channel support line here. This needs to hold, otherwise if we break below that, again, not good. Let's take a look at the dollar here, and what I was looking here for the dollar is the dollar is trading very close to its 200-day moving average, and there seems to be trying to hold these levels here, these lows. We'll see whether the dollar is going to hold or it's going to break down. So we can either expect the dollar to break out of this wedge outside of that to the upside, that's going to be bullish. Anything that brings it below that support level, that's going to be bearish. So we'll let the dollar tell us what it wants to do. Since it's trading in a range, we can't decide in advance. If you take a look at gold now does seem to have got out of a range here. You see that connecting these highs, draw a straight line, we are right here, seem to have broken out of that range. We have now an upward looking 50-day moving average. So to me, gold looks like it wants to start moving higher. The only thing that would negate that is that if gold sells off very quickly in the short term and this happens to be a trap. Sometimes markets do that, and usually what the markets will do is, let's say markets a stock comes out of a range like here, breaks out, everybody goes long, and then immediately turns around. So this turns out, on hindsight, to have been a trap. So we'll see whether this is a trap or whether this is the beginning of a nice move to the upside. It's very early to call, but if you are going to buy gold, this would be where you want to buy, because you see a definite breakout of a range. Again, same thing with silver. You see that silver on a daily chart has moved about this price channel top lines right there. With that move above that, that's bullish for silver. If you ever wanted to buy silver, this is a place you want to buy it, because it might be changing its downside direction going back many months, so more than a year. So the thing is, this is where it seems like it's, wants to move up. You see that the 50-day moving average has coiled to the upside. Slowly by slowly, even silver is starting to come back in play. Now if you take a look at silver from a weekly chart, again you see the same thing. For now, it seems like it's broken out of this top lines here, which is good. Also, we see that it's trying to move its 10-week moving average above the 33-week moving average. So that crossover could also be good long term for silver. We'll see what happens, but it's not the worst looking chart in the world, to be honest. So if you wanted to buy silver, this is where you'd want to do it. Obviously, especially on hindsight, we see that this was a bad time to buy silver when it was moving lower here. At least now we see it's coming out of this range. That could be where you want to buy silver. The only thing that I'm looking at here on a weekly chart, because there's always the other side of the trade, there's always somebody else thinking the opposite, is that this is where silver would stall. Remember, we stalled here. This area on the RSI is where silver made a high over there and sold off, and so we are back at this area level here. If we can't hold that level there, then definitely silver also might see a pullback, and this could be, again, could be a trap. But if you wanted to buy silver over the last year and a half, this is probably the best place to buy it, because it's moving out of a range. Let's take a look at copper here. Again, you see that copper is trading very nicely just above the 50-day moving average. We have a flat 200-day moving average, so maybe this one wants to move higher, and that could be the setup there. So we'll wait and see what happens there. Let's move on here. We have the oil services ETF, OIH, and what bothers me here is the fact that this has been a store point on the weekly chart, has been a store point for this instrument. It was a store point here, which corresponded with that high, store point here on the RSI, which corresponded with that high, and we have another store point here, or a choke point, and that could be a significant high. And really, that makes me wonder whether the dollar is really going to be moving higher and maybe push back silver and push back gold. It's really, we'll see over the next couple of week or so. We'll see whether the dollar is going to be bouncing to the upside and push these other instruments lower. GDX on a daily chart, very obvious here that ever since we gapped down here, we've not been able to move above this level here. So the GDX, the gold miner stocks, are not in play as far as I'm concerned until they break out of that range. Right now we seem to be bouncing on this, what has become a roof. So we'll see. Again, another reason to be very skeptical, why you shouldn't rush out there and buy gold stocks per se. Maybe the instrument, the gold metal itself might be a buy, but I'm not sure that the miners are in play here. We'll see. Take a look at the XLF, and again you see on the daily here, not the worst looking chart. We are trading above the 50, trading above the 200-day moving average, which is pointing higher. The thing that I'm looking at here is that the RSI should be stalling around here. We seem to be in the conclusion of this wedge type formation here. Do we break out or do we stop? It's very tough to tell. So given that, is the market seems to be at a precarious position. Anyway, whatever happens here in the next couple of days, next couple of weeks, in the short term, the next month or so, there's a big move coming in this market. I suspect it's down, but there's a big move in this market. It could be up, it could be down. Eric Mwatha with Mwatha.com. Good luck, peace, and blessings.